Hello, my name is Rob Newman. I am the tax partner at Carter, Collins and Meyer, firm of accountants based in Rochdale. This is part of my monthly update, which I provide as CPD for clients and also for a variety of members of professional organizations. I often do these live. I often have guests on them. This month, unfortunately, I have pre-recorded this session as I am unable to attend live because I myself am on a training course. This month's session is a quarterly update to do with business news and tax. It has already gone out to the clients of CCM in hard copy. I'm sure, though, that they will value seeing my wonderful face yet again. It's going to take about 30 minutes, I believe. There's quite a lot of material this month covering the quarter, mainly to do, obviously, with the ongoing and closing down, ongoing pandemic and the closing down of the schemes. I'm going to share the screen now, so I will be minimized up until the top right. The slides will be available on download on our YouTube site. And if you do have any questions, please do email me at inquiries@uk-ccm.com. Look forward to hearing from you. So without further ado, boom. So, already talked about this stuff, already come up with it. So the first thing to do, the COVID-19 update. Government has announced a 4 weeks pause at step 3. I'm sure everyone's very familiar with this. Who knows what will happen with Sajid Javid stepping in. I'm recording this on Monday afternoon. We are due to have an announcement this afternoon, early this evening. It's unlikely, in theory, we could open up again on the 5th of July. To be honest, I think that's probably unlikely. I think we're looking at the 19th of July. Certainly in terms of my principle of follow the money, there's no more new announcements having been made on new support. They have refused to extend furlough any further. So I'm of the view that 19th of July does look likely to be the final date of social distancing. Whatever your particular views, I think the vaccine has proved to be successful in cutting numbers of cases and certainly looking around the world. We will wait and see what later in the year brings. If you do want to see any more details about this, the restrictions details are further down at the bottom. Moving on. Pension contributions are an efficient tax ploy for employers and employees. Pension contributions to approved pension funds, and I think that's important to stress, approved pension funds. These are the usual ones you will find if you take advice from an IFA, rather than something I will mention later in this particular talk. On behalf of employees and directors, continue to be a tax-free benefit, provided the annual input limit of £40,000 per annum is not breached. I am a very big fan of pension contributions from owner-managed businesses. It is probably the singularly most efficient tax opportunity available to owners of businesses today, which is not going to be questioned or attacked significantly by HMRC. There are still schemes doing the rounds. I am not a fan of schemes. I am not a promoter of them. I think you can still do an awful lot with pensions. The contributions are deductible for the employer in the limited company, provided they are wholly exclusively for the purposes of trade and are physically paid before the end of an accounting period. For most taxpayers, the annual limit is £40,000. If you've unused previous contributions, these can be brought forward for up to 3 years, and it allows quite a significant amount of payment into schemes. Payments into the pension by the employer, as I say, is deductible against business. This currently saves 19% corporation tax if you're a limited company. But from 1st of April 2023, it will save 25% where profits exceed £250,000 and 26.5% between 50 and 250, where I believe a lot of people watching this video are likely to fall. Yes, the tax rate is going to be 26.5% on companies falling in profit bandings from April 23, something not particularly publicised by the government, but has been talked about by me in previous videos. I think pension contributions are likely to therefore present even more opportunity for business owners, but are also likely to come under spotlight of Rishi at that stage. If you think all of this is going to happen, which I still have doubts about it actually being the case, because if I was Boris, I would certainly be looking at having an election some point before there and cutting corporation tax as part of my pledges. However, if you do follow that rule, I think it is, and being talked about, quite likely that pensions will be looked again at in further budgets arising by the government before now and that date, and who knows what could be taxed on them. Certainly dividend withholding taxes or dividend taxes were put onto that form of planning, and it wouldn't surprise me if something similar was not eventually put onto pensions paid for by limited companies, or the relief being obtained was restricted, either or. None of that is actually official public policy at this point. That's me reading the financial press and my own views. Again, I think it's one of these areas that the public don't really understand and is therefore very opportune to attack and challenge by government, because nobody really gets what they've actually just done. One issue to do, always remember, is if you're under the age of 55, despite pension freedoms, you can't actually access the pension. Obviously, if you are over that, you have the opportunity to access through pension freedoms. You will be taxed on the amount you withdraw. However, this is what I mentioned before, do not use unfunded pension arrangements. This is something that I have seen people use, which is why I've put it in there. HMRC are currently tackling or attacking a marketed tax avoidance scheme using unfunded pension arrangements to avoid corporation tax. HMRC strongly believe these arrangements do not work and will seek to challenge anyone promoting these. The arrangements involved a company creating an unfunded pension obligation to pay one or more of its directors a pension in the future. This creates an expense in the accounts to reduce the company profits. It is the intended result of this to reduce the amount of corporation tax being paid. With many of these arrangements, and certainly with the one that I have directly seen, the company subsequently transfers the obligation for the pension to an associated third party. The third party is usually a relative or colleague of the director due to receive the pension. The intended result of this step is a payment to the director or closely associated third party with no immediate income tax liability or national insurance contribution. So if you think about it, the company seeks to fund a pension. It later pays the money that it would use to fund that pension to a third party who is related to the person for whom the pension is being done, and nobody pays any tax on any of this. Great wheeze. In my humble opinion, it doesn't work, and that is also the opinion of HMRC. Please, if you do come across this, let me know and avoid it. Having picked up the pieces of a vast amount of failed tax planning over the last 12 years, I don't want to have to take you through courts if you do pursue this type of arrangement. Again, there's a Spotlight 58 below if it's something you want to have a look at further, as to know what you are looking at. Basically, anything that is not being paid into a recognized pension company is what I would say is to be avoided, and all pensions are within the proviso of financial advisors, properly regulated and authorized by the FCA or Financial Conduct Authority, FCA, even whatever they call themselves nowadays. And they change their name every other week. So please do think about it. Carbon capture, usage, storage competition, 20 million in grant funding for initiative projects to reduce the cost of deploying carbon capture, usage and storage. It's going to be split into a couple of levels. If it's not going to be directly applicable to anybody watching this video unless you are going to get into the carbon capture business. Now, I don't discount that. I've seen a number of business plans for these type of intermediaries and type of companies. If it's something you want to do, fantastic. Be aware that there is funding available for it. Claim for wages through the coronavirus job retention scheme. I think this is probably a lot more applicable to those watching this video. Information about changes from the 1st of July has been added for claims for furlough days in June 2021 and must be made by the 14th of July. The coronavirus job retention scheme was extended to the 30th of September recently, prior to phase 3 of lockdown being extended. From the 1st of July, the government will only pay 70% of wages up to a maximum of $2,187.50 for hours employees are on furlough. This is a reduction from the 80% that it has been for quite a while now, and means that the employer must make up the 10%. The employee must still receive at least 80% of their salary. What is being said of businesses which have just been surviving, ticking over, will now start incurring costs and are likely to start being seen to fail. If any, I think we are already identifying many businesses that are struggling at this time. I think we are fairly in touch with them, but if the changes to the coronavirus job retention scheme furlough do have an impact on you, please do let us know. We can then make the appropriate introductions to the right people. If you need further information, it is listed down below, again with links available from the slides which will be downloaded. Kickstart grant scheme. I think this is quite a good scheme myself. Kickstart grant scheme has been changed. Initially, it was almost impossible. You had to take on a ridiculous number of people, but now you can get it from one person onwards. The aim of it is to create new jobs for 16 to 24-year-olds who are on universal credit and at risk of long-term unemployment. The funding covers 100% of national minimum wage, 25 hours a week for a total of 6 months, the associated national insurance contributions, and the associated minimum automatic enrollment pension contributions. Employers can spread the start date of jobs up to 31st of December. You will get funding right the way through to the 30th of June 2020, depending on when the person started. Further funding is available to support the young people on the scheme so they can get a job full-time in the future. There's a link and walkthrough of how to apply in the How to Apply To section of the Kickstart grant scheme, a link of which I've given you. If you are looking at taking on a young person, I think, as I say, I personally think this isn't a bad scheme. There's lots of other things that are available to them as well. There's lots of funding for training. I'm not sure if I put it in the slides, but certainly in terms of the AAT trainees we take on, we're going to end up getting about £4,000 a person in terms of funding for them over and above this. So do, if your business is looking at young people, have a look further at this scheme. Eviction protection extended for businesses most in need. Yeah, there's an awful lot on these slides. As you can see, there's a link down here at the bottom. Essentially, the protection is going to be extended through to the 25th of March 2022. Now, if you are in problems and unable to pay rents at this stage, do please contact me. robert.newman@uk-ccm.com or inquiries@uk-ccm.com. We can put you in touch with absolutely the right people. We can look at refinancing your business. We can look at creating voluntary arrangements. We can look at full-blown insolvency. Please do not stick your head in the sand if you are unable to pay your business's rent at this point. If you've got arrears that need sorting out, again, let me know. I can make introductions and put you in touch with the right people. It's by this point it should be washing itself through. If you need to shout out if you're struggling and suffering. Private providers of coronavirus testing. List of information about private providers who have self-declared they meet the government's minimum standards is available here. Of course, these tests can be funded by employers. You can provide this as a benefit in kind that has no tax liability. It's something you can have available to all of your people and yourself. If it is wholly and exclusively for the purposes of your business. Again, hopefully we're coming out the other side of a lot of this, particularly people being vaccinated, but certainly worth knowing that it is there if you want it. Right to work checks. The following temporary changes were made on 30th of March 2020 and remain in place until 31st of August. Checks can be carried out over video calls. Job applicants and existing workers can send scanned documents or photos rather than sending originals, and employers should use employment checking service if an prospective existing employee cannot provide any evidence of the accepted documents. Essentially, it is a slight watering down of the rules. You don't have to physically see people until the end of the 31st of August 2021. You can still do it over video calls. You can still accept scanned and photographed documentation. Again, I foresee that a number of the people, or most of the people watching this video, won't have this situation, but it is worth knowing. And certainly if you have taken on employees in the last year that you have any concerns about whatsoever, truthfully, we just do this on all employees. You still have the opportunity to catch up your records, even though you should have done it at the time. Again, further links available at the bottom of this. Landlord right to work, right to check, same sort of things. If you're a landlord, you can do it at a distance. Again, it also applies to some of the anti-money laundering stuff as well. Local restriction support grants. This is very applicable to those watching this video. I think a lot of people should be following up on this. This is not something that we can do for you. We don't have enough information about you, your business, or your rateable authority. We also are just not allowed to as well. Do please go and have a look at your local authority and see whether you and your business apply or qualify for any grants. There are still some out there. They're not as good as they were last year. You're not going to get the £10,000 automatically that you got last year. But there are still things out there if you suffer restrictions. I think particularly falls within catering, hospitality, public houses, theatres, cinemas, that type of hospitality type businesses. But there may be others, and local authorities we have seen do have one or two unusual schemes. We've seen particularly funding in Wales pop up and some parts of Lancashire as well. So please do have a look at, follow this guy down here and see if anything is applicable to you. Make sure you claim it. It's free money. It's out there. Go get it. Again, further details on those. Check if you're eligible. There's restart grants as well that are available for a number of people. These are determined by the individual authorities. You do have to be in effective businesses that have been closed. These are, again, are going to be in hospitality, travel, tourism type businesses. They're not going to apply to everybody, but who knows? It's worth having a look at. I think I list some of them: tourism, wedding, nightclubs, theatres, events, wholesalers, not sure why that's there. English language school, breweries, freelance, mobile business, catering, events, hair, beauty, etc. If you think that you may fall in any of those, please do have a look here. Again, free money is out there. And that is actually it. I think we were quicker than I predicted. I think we were considerably quicker than I predicted. If there is anything, that's your topical update for this quarter, please do let me know. You've got details on screen. Hopefully that has been useful. Softer skills again next month. Can't remember what's actually on the schedule. But until then, thank you very much and goodbye.